Good morning, you listen to FloorDaily.net, and I'm Kemp Harr. This morning my guest is Keith Hughes, an analyst with Truist, formerly known as SunTrust, that focuses in the building products area. Keith, how you doing?
Doing fine. How are you?
I'm good. It's good to catch up with you. We'll talk about some of the flooring publicly traded companies. Before we get to that, I got back from Dallas today. That's a regional show we've been wrestling with over the last year with supply chain, inflation, and labor, and now we've got a fourth thing to worry about, and it's Omicron.
Yeah, we'll see. Boots on the ground, if I look even outside of flooring into kind of all the residential products I cover. For a good 21, we ended the year on a high note.
Yeah.
You know, business trends had remained pretty good, and that's despite all the supply chain disruptions, labor disruption, consumers having to wait on products, inflation. I mean, we could just sort of tick off all the problems. Things sure could have been better, but wow, they sure were pretty good.
Right.
21.
Let me just agree with you on the residential replacement sector of flooring. Of course, they chase the previous year's numbers, so up until, I'd say, October, most of these retailers were looking at a 20% plus growth, and then they start chasing the great performance that we saw at the end of 20, so that number probably came down to around 17 or 18%, but still 17 or 18% for a year in growth is pretty good.
Yeah, and I think to your point on Omicron, I mean, first of all, I don't think we have any hard evidence in this. And while it makes a lot of news media, I mean, the reality is that consumers spent a lot of money during the early days of COVID when a lot less was known on their home.
Right.
I don't know that Omicron's going to have an influence on flooring demand in the first couple months. Now, I'm not making any promises beyond that. You know, it seems like the industry is in pretty good shape on just the demand side, on the residential side for the first quarter. And, of course, the new news story we had in 21 was the return of commercial. And granted, it was coming off some low numbers, but, boy, that industry seemed like it ended 21 with a tremendous amount of momentum to finally begin a real upswing after a tough 12 or 18 months post-COVID. The big risk factor, and this has kind of come up this week, if you've seen the trading of the stocks and the market as a whole, is, of course, interest rates. You know, the Fed's been talking a lot about interest rates. I'm sure everybody listening has heard that. And then the first week of January here, we saw, I won't get into the specific reasons, but we did see the 10-year Treasury, which is kind of the benchmark for mortgages. We did see it move up. Now, it's not at a historically abnormal number, but the fear factor is it's going to continue to go up here. And a quick rate rise can kill any rally in residential products. So that always is the risk factor. I think the risk factor is heightened now because of the inflation and what the Fed is going to do in reaction to that. We won't lose periods of time where the fundamentals may be a little different than what the stocks are telling you, because the stocks are worried about this potential rate rise.
Let's go through a couple of these. Probably start with the biggest one, Mohawk. You take a look at them, and their stock has been up in a kind of a nice range, but not where a lot of people had guessed it would be. So tell me what you think.
Well, the thing that hit Mohawk most in the second half of last year was raw material inflation. Now, of course, that was not unusual across all the building products and all the flooring. I mean, We've seen raw material prices. Everyone knows that's gone up a lot. I think specific to Mohawk, and particularly in Europe, you might read about the European gas situation. Well, that's hurt all their European businesses because they're paying really elevated levels for the natural gas and all the derivative products that come off of natural gas. And that came somewhat unexpected. That was highlighted in the last quarter. It played a role in the fourth quarter. Will play a role in the first quarter here as well. The flooring industry, particularly the Mohawks and the Shaws that still have sizable carpet businesses, it's a petrochemical product, and so they've seen a tremendous amount of inflation. While they've seen a lot of price increases come in to help offset that, the carpet industry always has this mix problem. When they go up in prices, the mix comes down. So they never quite get as much in dollars, I think, the industry wants. That kind of, you roll out all that together, it plays in. And I think, investors still haven't on Mohawk gotten over all the LVT problems that kind of reared their head in 2018, 2019. While they're doing a lot better, investors still haven't put a big valuation on the stock. There's still kind of a prove-me story, if you will, on Mohawk. I think 22 could be a year where we see input costs go down. Mohawk, as much as any stock I cover, could benefit from that. But I think they really need that moving forward to kind of kickstart the margin growth again.
You're talking about mix changing when prices go up. One of the interesting things I'm still hearing, even down in Dallas this week, is that better end goods are selling. And you start looking at what the products that are being introduced. There's more people introducing hardwood products, which are more expensive, and better end carpet for these consumers that are doing one room at a time. So that was a piece of news. Another thing with Mohawk real quick, that I just recently went down and got a look at a new, what they call signature series of laminate products. It's really realistic. It could kind of change the game on where laminate stands relative to LVP.
Yeah, I mean, there's no question that the laminate, and we saw this in the numbers on Mohawk at 21, the laminate growth was the best part of their company during 2021. And it's all part of the idea that the LVP, it's not as though that product is still not the hottest product in flooring, but it's definitely starting to see the law of large numbers come into play. You know, it's a big category, going to be a big category, going to see still probably above industry growth, but I think the explosive growth days of LVT are probably behind it right now. It's kind of settling into that niche as arguably the second largest product category in units behind carpet, and it's clearly going to stay there. But people are seeing some of the downsides to LVT. And that's one of the things that helped Mohawk specifically. They're going to do best when the industry is growing, on all products in the industry are growing. And that's been the environment we've been in, probably the environment we will be in, too, for the near term. Just got to get that raw material monkey out their back.
All right, let's talk about Interface, because actually, you look at them, they're paying at 15 now, on a range of 10 to 18, so they're on the upper side of that.
Yeah, so the big beneficiary for Interface has been the return of commercial. And to be clear, we're just coming off the bottom on commercial. But traditionally, when you go into one of these cycles, they last for multiple years. Mm-hmm. And that's sort of the bet on all the commercially related products, of which Interface is almost all commercial. I think the other thing on Interface that's interesting is that, we had a CEO change a couple of years ago at Interface. Still have an interim CEO in place, still looking for who the permanent head's going to be. But we're seeing a discussion in Interface controlling their SG&A costs. And that's always been kind of the catchy part of Interface's stock, is the just costs are never quite in line with where sales are going at times. Been a lot better the last couple of quarters, making some big promises. Got to fulfill those promises. But you couple that with a good cycle, and that's one of the reasons. It was one of the better stocks in my group for calendar 21. And probably still got some upside here as long as that cycle continues.
I talked to Dan Hendricks at a meeting that I attended in October, and he said that he had identified and had a commitment from a new president who was going to start in January. I haven't talked to him to see if that's still on track, so there might be some news there soon.
So I'm seeing an announcement, so
yeah,
I've been looking for it.
Let's talk about Armstrong. That's kind of the one everybody's been interested in, especially with this 8K filing that we saw here at the end of the year. Tell me what you see there.
So what they filed, I believe it was on New Year's Eve. They've gotten some new short-term financing, and we're pursuing strategic alternatives with an investment bank. Now, usually when you go down that path, what you're looking to is potentially sell the company. There could also be a scenario where they get a long-term, capital investment or something along those lines. It's still to be determined what's going to happen. I think their numbers sort of speak for themselves the last couple of years.
Right.
It's been a tough run since they split from their ceiling partner, the Armstrong Ceiling business.
Yeah.
We'll see what happens.
Yeah.
It could go several different directions.
Yeah. They're on their heels a little bit with a bigger focus to direct, which requires more SG&A costs, and that also makes the distributors who've been with them for a long time kind of scratch their heads. So it'll be interesting to watch this.
Yeah, they've had several strategic shifts, and there was the direct shift that they seem to pull back from. The big kind of doubling down of ECT has been several years ago now. The purchase from Mannington. There's been several kind of pivots, I think, that people always question exactly where they're going. Been a little more consistent of late, but I don't know. So question marks there.
Well, let me ask you a question just about the market. As an expert in this area, what are you thinking? You think we're going to continue to see some good numbers?
I do think that within my coverage, including the stocks we just discussed, I mean, if you look at 2020 and 2021, basically if you took my list and threw a dart at it, as long as you hit a name, you had a pretty good chance of doing well in the stock. If you go into 22, it's about to get a lot harder. There's a lot of good priced in these stocks right now. As I said earlier, if rates get out of control, they'll put pressure on every name in the group. I think that's as I said before, kind of a huge risk factor. But even in a positive scenario in the building product sector, you're going to need to see specific stories around something involving a company or a subset of companies to get outperformance from the market as a whole, whether it's a company that does particularly well with in a deflating raw material environment. We talked about Mohawk on that before. Move back into the real meat of a commercial cycle and Interface, along with some cost control there. Those are the kind of stories that need to be executed on. So it's going to be an execution year And not every stock's going to outperform during the year.
All right, Keith, thanks for spending time with our audience again. Been talking to Keith Hughes, a building products analyst with Truist, and you've been listening to Kemp Harr and FloorDaily.net.
One final thing, we do have some disclosures on TruistSecurities.com. But again, thanks for having me, and we'll do it another time.
Okay, Keith, appreciate it.